Hey, thanks for tuning in for a few minutes to the Financial Security Planning channel. I'm Eric Powers, a certified financial planner, and today we'll recap a couple of the economic and financial high points from February 2021. A lot gets packed into a month, right? Remember that this month we saw the historic second impeachment of a president. It's unfortunately noteworthy that our country is divided and that the division is deep between our citizens and the government. The Senate did not have the votes to convict, so we turned the page. Jobless claims increased some this month, and even as the economy will be reopening, gathering back the jobs to full employment may be a challenge, although Treasury Secretary Janet Yellen believes it will happen this year. Let's remember that even though we'll be returning to some of our pre-COVID activities, perception of safe travel and leisure may be a bit laggy when it comes to enclosed airplanes and enclosed cruise ships. Good news is that we'll be very likely to achieve full employment well before the EU sometime late in 2022. Stimulus aimed at households, businesses, and COVID relief was center stage this month, but this round is getting more attention in regards to the cost. Surely all stimulus, including future stimulus, will have costs that will eventually be passed along to the taxpayer. But what we observe at the end of this month is that the growing concern that the economy may be heating up too quickly and inflationary. Thing is, inflation won't happen overnight, and the majority of policymakers are not significantly concerned at the moment. So we can expect that the result of kicking the can down the road and the resulting inflationary fears are probably a little premature. In the markets, we've seen great attention given to the meme stocks. A congressional inquiry has basically found that the collective power of social media-based investing was not a market manipulation. On the other hand, they've also scrutinized brokerage firms, suspending trading as a possible benefit to hedge funds. Long story short, we should not discount the collective power of the retail investor. In the same breath, though, we should be reminded that Wall Street and hedge funds aim not to be caught off guard again and are developing strategies to always win. Cryptocurrencies are highly speculative, mainly because there's no rule of law or regulation as a currency, but that is right now. The speculation that it'll make its way into general acceptance has recently been accelerated by companies that have added crypto to their own portfolios, as well as Wall Street's interest to do the same. Policymakers around the world are working to create rules, and there's a clear momentum, but until there's some formal acceptance, it still remains very speculative. We're beginning to see signs that the market is rotating toward value-style stocks. By no means are they giving way to the technology growth that has been so rewarding, but value is possibly going to see some of the more apparent benefits as the economy continues to open and earnings are credited to value. Although the credit markets have seen some volatility, especially toward the end of the month, the asset class will likely remain under pressure for some time. Thanks for watching, and stay tuned as we move into warmer weather and economic climate. Bye for now.